Hi, it's Brian Egger for BreakingCall.com on October 24th with comments on Royal Caribbean, ticker RCL. Now, the stock was up about 5% pre-market this morning. It is now up about 5.8% early in the trading session after the company reported better than expected third quarter earnings. So given that Carnival, CCL, had provided disappointing 2014 guidance in late September, it's a fair reaction that Royal should gap up today based on a reasonably positive 2014 outlook. Now, two specifics explain Royal Caribbean's favorable trading reaction today. First, Royal Caribbean posted adjusted earnings of $1.71 for the third quarter on a 2.6% increase in constant currency revenue yields, and that exceeded recent company guidance and the consensus expectation of $1.65 in earnings on a 1 to 2% yield increase. Secondly, for 2014, Carnival indicated its own expectations are consistent with the Street consensus of 306, with overall yields expected to increase in the low single digits next year. Now, that reasonably favorable yield and earnings outlook and indications that demand for Europe is firming, despite a somewhat softer scenario in the Caribbean, are driving the stock higher today. And again, this is a counterpoint to Carnival, which recently implied that net revenue yields could be down 3 or 4% in the first half of 2014, mostly because that Carnival brand is working to rebuild its image after a number of ship incidents. So I'll now turn it over to my colleague Mike Andrake, who will discuss the technicals for Royal Caribbean.
Hi, this is Mike Andrake for BreakingCall.com. I'm now going to add a technical perspective to Brian's comments on Royal Caribbean post-earnings. The stock gapped up sharply and is currently up about 6% from the prior close. Based on the chart pattern and technical position leading up to the announcement, the reaction is as expected on solid fundamental results and supports prior indications that a trend continuation setup was in place. This gap up breakout is bullish and confirms an ongoing intermediate uptrend dating back to significant lows in October 2011. The weekly chart shows a series of higher lows after the big sell-off in the fall of 2011, and the stock has recently moved solidly above the key 10 and 40-week moving averages. Today's breakout expands our upside target and establishes new support levels that argue for a retest of the major 2011 high in coming months. We would now put initial support at the old resistance or breakout level of about $40.70, then at the rising 10-week moving average near $35.90. The weekly technical resistance targets are now at the major high at $49.99. A quick look at the daily time frame shows us a clear uptrend, with the stock spending most of the last year above the key 200-day moving average, which is now currently at about 36. First support is the gap near $39.87, then at the 50-day moving average near $38.30. Below that, we have the 200-day moving average as solid long-term support. Technical extension levels now represent resistance in the daily time frame at $45.30, then next up at $48.90. Thanks for watching, and visit us often at BreakingCall.com.